Good morning, everybody. Hope you guys are doing well. Sometimes the daily bias, got a couple things I'm looking for. We're kind of in the middle of the range, so either way, can either run for the Friday high or trade into the premium IRL up here and then go back to the sales liquidity pools from Asian and London session. We also have this 15-minute IRL and discount too. So watch the SMT between ES and NQ right now. This PM session high, if you go back to ES, you'll see it. So falling short here. We do have 9:45 news. So be careful of that. I don't expect it to be crazy, but IRL to ERL on this 1 hour this morning. Yep. Dropped right into discount there, I think. For value, up right up to premium. Nice little, 81 points. Solid. So this is the IRL I'm dragging from the hourly chart. We have this sibi, also technically a BPR, and the ERL obviously from up here. You can kind of see the market maker buy model forming on the hourly chart. And every week there's going to be one market maker buy model or market maker sell model. Typically on the hourly chart, you can be completing it from the higher time frames as well. But we're watching this for now. 15-minute chart. Obviously, we got the session liquidity pools down here. So watch for those 15-minute candle closes. If we close substantially below the previous day high, so this yellow line here, let me take some of this executions off. This yellow line, extend that out. If we close below it, typically that's a good sign of a reversal. You can target, obviously, sell side there, sell side below this. And then with the SMT too, that'd be a pretty quick shorting opportunity. Need that 5-minute candle to print bearishly after take of the high. So probably the 9:45 candle will come down if we want it. Took that long into the ERL. Nice. Yeah, with that 850 macro is actually beautiful. Value gap in here and discount with the order block. 49.50 takes it there, and then order block trade right here too. Anyways. So watch us see how we use this as inversion. This is our first rally gap that's printed after 9:30. Typically, we have a decent amount of setups that form off this gap, just like opening range gap. Larger opening range gap as well, all the way down to there we go. May want to mark out consequent encroachment of this as well. It's at 17,380.25. I'm not going to keep it there. We have London low right there anyways. Remember, new week opening gaps and opening range gaps can be used as forms of IRL. So you have new day opening gaps, new week opening gaps, and opening range gaps. They're all technically forms of liquidity voids on specific time frames and on either RTH or ETH. It's not something that I use personally, but you can if you want to. All the candles are closing right now below mean threshold. Sorry, consequent encroachment of this for value gap. Here would be the change in state of delivery. So the last order block that's being held right now. If we close through that aggressively, then you have your breaker in here too. We do have a decent amount of gaps coming down. We have this 5-minute gap here, this 5-minute gap here, and the 15-minute gap, and obviously some more gaps on the way down to London low. So if we were to trade lower, gotta be careful of those. Probably take partials as we go from here to London low is 120 points, so you don't need the entire thing. ES is still kind of stuck in that 15-minute sibi. Traded above it, but watching it right now. But still barely any movement to the upside. Yesterday there was no stream, but I posted the live tape read up in models and reviews. I'll send it right in here. So if you want to go and watch that, took a loss off of the 950 macro, went long, I think. It's posted in futures trades. Let me look. Yeah, went long with the fair value gap targeting ERL and got stopped. But on a Monday, it is what it is. It'd be very, very tiny bearish or bullish SMT here. There's your IRL tap. Like in 2 minutes of those 15-minute candle closes, obviously, if you close substantially above this PDX, then you're going to see it continue to expand, most likely up until Friday's high, which is the preferred target for me. ES is now climbing up, taking out their previous day higher within what, like 2 points. So don't think we have any other news besides this 945 one. Yeah, Wednesday, no news. Thursday, Friday should be solid price action. We got 8:30 and 10 a.m. news. ES is still falling short. This should be used as a bullish order block here. So we now tag the IRL and premium on the hourly chart. If we were to reverse, we're going to go down for London low as the next target. I have Asian low put up here, but it doesn't need to reach down into this. And in terms of the profile as well, we don't have any London protraction to the downside, so we won't, most likely won't see continued expansion in New York. Really no protraction after 12. Where's midnight? Right here. So just continued up. Normally we have New York reversal with a profile like this. The time PDF is also posted into the time section on the Q&A. Let me see if I can find it. So if you want to read up on that, I'll probably make a quick like 15-20 minute video covering it. But a lot of the stuff that I talk about in the PDF is just mentioned on stream anyways. So if you've been here for more than a week, I'm sure you've heard probably majority of the stuff that's in there, but it's now written down if you want to study it. Yeah, no problem. So here's the news. Obviously not a whole lot of volatility, but we're holding the bullish order block here. And look for ERL. Obviously the 5-minute candles are printing extremely bullishly, and ES is now taking out their previous day high. So I'm going to remove this SMT. Watch the SMT down here. Can you elaborate on price seeking order blocks with volume imbalances contained within them? Will this always be a magnet? Well, it depends on if the order block has one. So just because an order block has a volume imbalance doesn't mean anything. Preferably, you're going to just see an order block used regularly. Like if there's no volume imbalance, it's still going to be used. But something like this is exactly why price is going to reach down to this level. So you have an entire order block range here. I'm pulling from the candle bodies. And instead of it using the top one, it's going to come down and touch this bottom order block. So it is a tape reading skill that you probably will rarely use because it may not show up a lot of times. But they most likely need to be paired with fair value gaps if you're going to be using an order block like this. So don't be looking for them because they're not always going to. It's not a magic PD, right? But when you have an order block range and you want to see it be used as a bullish or bearish order block, and there's a volume imbalance present, then you want to refine it down to the volume imbalance. You can still get a reaction out of the top in this case, right? But you want to see, okay, I want to draw either the wick to wick, extend that completely out, or then draw, a line within the gap, like something like this entire box, and then draw the line at the volume imbalance level. And that's most likely we'll get the most reaction. It's just a very niche tool to use. Yeah. Yeah. So if there is if there's a volume balance present within the order block, I would say place your stop hypothetically below the entire order block range, not even at mean threshold. It needs to be below that or even below another PD ray in case it wants to completely maybe wick the order block by a tick or something. So far we've been closing aggressively above lunch high, sorry, PM session high. ES is now also up there. We go to the hourly chart really quickly. Got Friday's high up here. Thursday. Oh, actually, there's actually some SMT there too. Taking out Friday's high already. Didn't even notice that. Now I'm a little hesitant because I don't know what the profile is with 945 news. I assume it just doesn't do anything. And we're just going to continue to hunt for the setup. But if everything is then shifted forward 15 minutes, I want to be careful of maybe 945 to 10 to create maybe another Judas swing. But we got this order block here with the fair value gap in discount. So, and we have this now as an inversion level, the hourly IRL. So if you want to climb down there right at 950, potential long opportunity off the order block, off the fair value gap, this one right here. So we're going to see how we react to this level. So here is 950. We've got SMT at the lows. Is it 15-minute SMT? It is. Okay. There's your order block top with the ERL. And from here, we'll do 50% level up to the high is 71 points. Up to even this swing high is 39. So quite a decent range. Careful with stops. As usual, just manage risk. We're just going to watch to see how this wants to play out. And the level is at 17,553. There is no volume balance present within here. So we're dropping all the way into discount. Yes, do the same thing. There you go. Order block tapped with the fair value gap in here. You want to also find support off of a session high. Now, it's not really support and resistance, but when you have session liquidity pools on higher time frames, a lot of times you'll see them used as support and resistance as we climb through them, just like new week opening gaps. So something like, I can't really find an example here, I guess, right? Asian session high being traded through, comes down, and you find support right here around the same level, but it's not really the same thing as retail concepts. It's just more of it's a PD array. It's a very, very far PD array in the matrix. Old highs and old lows are technically premium and discount arrays, but they're rarely used because in between wherever price is at, and say we have price here, and you're seeking a premium array up in past data, it's going to go, I think, mitigation block, breaker block, fair value gap, order block, volume balance, old high, old low. That's from a video in core content month, I want to say 10. If you scroll all the way up in the prophecy chat, there's probably a picture. And this is extremely important to know when you want to get good at tape reading, because understanding which PD arrays are strong and where we are in price relative to them, a lot of times you can get good quality trade setups just by knowing which PD array it's going to react to and which one it's going to fail to react to. I don't know if I can find it. I'm not seeing it. Anyways, it should be called higher time frame analysis or something on YouTube. Let me pull this up as we continue to trade. Watch this to be used as an inversion gap, preferably. I don't want to see it react off that, as well as this candle, the 947 candle. So I want this to be used as your change in save delivery for the market maker buy model, and then we continue to go up from discount to ERL, targeting this level up here, and then that would be probably the day. You want first partial hit by 10:20, roughly. We mark out the time intervals here. 10:30 here, 11 o'clock. So we're starting to get some, I can kind of see we're starting to react slightly off there. I just want to see it pierce through. Let me see if I can find this video. Here we go. I'm just going to screenshot it and you can study it if you want. Actually, I'll send the link. Here's the link. If you have time later today, it's a really, really good video. So you can watch it. And then here's the screenshot if you just want the screenshot. Obviously, it says monthly on here, but this applies to any time frame PD array. That's basically the order. So far, we're trading up nicely. Got this obviously as your short-term target. Now we could see if this is taken by 10:30, I don't really care too much after that. But if we start to just chop around here, then you want to see it taken, or maybe if we put in a little high like this, put in a high, start to meander around, come down, then 10:30 will probably trade back up. Which I assume what's going to happen is it's going to come, take this quickly, drop down into discount pretty far, and then have a market maker buy model maybe back up to the range. That's just off the top of my head, but what could happen. There's your first target met. Change state delivery used there. We closed above it, tapped it, and then continued to trade up. Same thing, still want to see it used as basically a breaker. There's a lot of stuff in there. Use the inversion for value gap as expected. Screenshot this really quickly. And how many points was that? From the order block up to 45 points. So that's almost your entire week. Bought at 17,416, sold at 17,500. Nice. 40 points. Quality stuff. Daily sibi and premium above Friday's high, 17,552.25. Thank you. Let's take a look. Okay, yeah, right above there. That's actually a really good target then. Euro plus the daily imbalance. Hey, bang and premium, but I'm a flux believer. Appreciate it, my man. Yeah, it is pretty far in premium, right? But I mean, without the Judah swing, I felt comfortable. It's just going to continue to climb up. Near this slight SMT here. This is really just barely, but I closed out second partial. I got stopped out after I basically just trailed it super tightly, which I probably shouldn't have done. I'll send the screenshot over to future trades. Super tight trail. But originally stop loss was below the entire order block, so it was here. Then after we traded up and closed to the CISD, trimmed it to here. Could have kept it there. If you're probably still, if I was still in a runner, I would keep it here. Maybe here too, you could trim it. Multiple PD raise order block for value gap, order block. Version for value gap, so tons of PD raise there. Now, if we climb and close through the 956 candle, that is most likely a high probability order block, and we won't return back into this blue shaded area. Tape reading took partials, not a break even. Love it. Yeah, that looks good to me. Where your stop is. Second take profit partial. Could you go through what made you confident to take those longs? Wasn't confident yet because I didn't see any Judah swing and thought it would wait for more bullish confirmations. All right, so a couple things. Obviously, yeah, we had the SMT in the beginning between the previous day high. And then ES popped right through it at the end of its first 15-minute candle, or right at the 945. So we traded through it, and we didn't see price have any willingness to go lower after we traded through this IRL. So this is the last IRL in premium before we reach this ERL. And if we wanted to respect this IRL, I would expect it to go down to London session low. Doesn't do that, right? Trades all the way through. And now we have SMT at the lows, slightly, just barely between here and here. I don't really like using this kind of SMT, but it's present, so still gonna mark it out. So SMT there, right? Then we have bullish PD raise being held. So we have this bullish order block being held, trades up aggressively, trades all the way back down. And we also have the ATM model in place. So this is 5-minute candle printing bullishly, right? Closing, I think it was above 50% there. Yeah, above 50% of that entire candle. And then obviously when we have trade idea, we have two opportunities to get in. Either a breaker plus fair value gap, so it's a unicorn setup long, or a fair value gap, preferably with an order block, and that's going to be in premium or discount of your current dealing range. So we have a low here, a low here, and a high here. So you split that in half. Here is your discount level. Okay, and we obviously have this blue for value gap with the bullish order block. So some days you're not going to have a clear 930 Judas swing. Okay. So it will just expand sometimes like this, and with the 9:45 news, I guess that's maybe expected. But this is also a profile I've seen before, like a long time ago. Like if you go back and watch the old stream recordings, probably in July of 2023, there was almost an exact replica of this. I don't know which date it was, but for some reason that's just stored in my memory. So it's both just pattern recognition and all those things playing in place. So obviously you're not going to have a Judas swing every single time. And when price is showing you that there's no lack of a Judas, or there is a lack of a Judas, then you have to just trade what's given to you. Or that could just mean no setup, right? So if there's no clear 15-minute SMT and there's no indication of it being strength, like having strength in its price action, then maybe there's no trade for you, which is perfectly fine. That's why I was trailing my stops so tightly, though. It wasn't a high probability trade setup in the terms of I'm going to see it run sometimes all the way to my target, then we'll keep the stop loss maybe further than normal. But I just wanted to quickly trail it with this breaker as well. You can see we're coming down now, so I'm fine with being stopped out on the second partial. But still a good, nice, well, like 30, I don't know, yeah, 44, 45-ish points maybe. Waiting to see what PA does for the second 5 contracts for the ERL high stop loss at break even. I like that. Oh, never mind. Probably got stopped out there, right? Continuation day. I prefer if it wasn't, to be honest, for the New York session. This is what I'm talking about, though. See how 10:30 and 11 o'clock, we put in this false high, also false low. So one of these two guaranteed will be taken by 11 o'clock. I would assume it's the high. I would find it weird if we came all the way back down and traded into low. I don't think we're tapping into anything on the higher time frame. Yeah, like I would assume that this is going to be this inversion. Now it's going to pop up and take ERL. Except only reason it wouldn't is because we have SMT at the higher time frames. So we already took out Friday's high substantially. But I'm not super worried. Yeah, can't be mad about that, right? And with I think it's a lower quality setup, still 37 points. But it's always good to measure your risk out, though, because if you take this order block entry and go down 32 points, it's most likely a little bit larger than normal. So still be mindful of that. Same kind of formation in here, right? We have this market maker buy model forming here. We could also see it form within this leg here. Here's your change in state of delivery if we close above this 959 over the block. It is 10:04. So this is the last time I would want to see the 10 a.m. retracement format. So preferably this low is actually not taken. I want to see just trade aggressively, preferably above this high. If this low is taken, then you could see 930 low taken. But it makes sense currently to go long if I'm seeing price holding bullish PD raise and price holding that inversion fair value gap. You could. Yeah, I still think it's going to reach this ERL. But like I said, with this 10:04 is the last little low I want to see put in. We have this fair value gap here also being filled, right? So I'm gonna actually send that to predictions chat really quickly. Oops. There we go. Nice acceleration up. So this low, if you were now to trim a stop, this low should not be taken. I do not want to see this. At least for me, I would not want to see that taken at all. Tons of clutter in here. Hopefully it's not too messy. Remove that. There we go. Same thing with this 5-minute candle. As we print above it, this down closing candle at 10 o'clock should be used as a bullish order block, and the 955 one. Nice accelerated run up now. And I want it to spool, so meaning we don't have a lot of retracements. If you go back to your 15-minute chart and look to the left, are there any speed bumps between now and the high? I don't see any fair value besides this one we've been trading back and forth within. Above that, swing high here, already been taken. Above that, no inefficiencies besides this wick. So if you want to split this wick in half, maybe extend it to the right, you could see 50% of that wick being used as kind of a resistance point. Okay. Otherwise, I would like to just see it quickly run. You can see that those 15-minute candles are printing extremely bullishly in here. So a new high formed. Looking solid. Now on sub 15 time frames, there may be inefficiencies. Like if you scroll back here, there may be one inefficiency. Yeah, we have one right in here, which is what we're tapping into right now. So, we're going to remove the wick CE level. This is a sibi. I'm just going to extend this all the way to the right. There you go. So there's a premium sibi. I do want to see this used as an inversion gap, though. I want it to trade above, do something like that. It is more tough. Yeah, it last week was exceptionally good. Like every single day of last week was almost like perfect. And normally you only have one or two of those per week. So don't get used to yesterday's price or last week's price action because it was absurdly clean. Yeah, obviously preferably we'd have a week every single week like that. But very rarely do you have high quality setups like that forming every day. What you can assume though is that there will be 1 to 3 of those per week. Normally there's around two high quality, good profile trade subs per week. And obviously if you split that between the two, 50 points between the two, you only need 25 points per trade. If you were looking at 50 points a week, you have 2 high quality setups, which 25 points per trade, if it's a high quality one, is easily manageable. So day like today, yeah, if it wasn't in your profile or wasn't in your preference, you can skip a day like today. We have 8:30 news on Thursday and Friday. So preferably you could just be trading those 2 days because on 8:30 news it's going to be more likely to be higher in on probabilities to find a good trade setup than something like tomorrow. Tomorrow is going to be a little bit more rough because it's pre 8:30 news, and we have no news present. Yeah, there's a couple MXM profiles. Here's the PDF. Let me see if I can find it really quickly. Here you go. Just some rough tux paint drawings. There's about 7 or so in there. Yep, we'll see you tomorrow. Good work today. But if you study those are probably most likely the highest probability ones you'll find. And if you want to really trade the good ones, it's going to be your sigma setups, I think omega setups and delta setups, I believe, are the 3 highest, at least for me. Sigma setups normally happen on 9:30 news days, or 9:30 true open days. Omega and delta will happen on 8:30 news days. And if you, let me see if I can find, no, I can find it. Let me pull up the Notion really quickly. So if you want to now categorize the trade setups, as you put it in Notion, you'll get something like this. So this is my own personal one. And all of the green days are the ones that I like to trade. Yellow is in between, so kind of a rougher price action. It's most likely easier to read. And then the red is just difficult. So theta and beta are going to be more difficult ones. Kappa and I don't know what the other one is. By the way, these are just arbitrary names. Like, this is not ICT. It's just, it technically is from ICT's profiles, but they're a little bit more specific and they have time correlations to them. But you can see something like last week, we have 4 green days. That rarely happens. You'll see maybe 2 to 3 on average. Yesterday, I thought was more difficult than it should have been. Today, a little bit more difficult too. Doesn't really follow a strict profile. And you can see we're kind of high resistance liquidity run moving all the way up into the ERO. Yeah, this will be posted. 99% of the live streams are recorded and posted. Also, just forget to. But yeah, when you pair those market maker models with the ATM model framework, so ATM model is a framework, right? Gives you time frames to look at, gives you what days is going to form, things like that. It's basically a full model. But then when you pair it with market maker profiles and what you've seen in the past, it's extremely, extremely strong because you're referencing your own hindsight bias and your own pattern recognition. Plus you have now a entry technique and an entry model that allows you to get in line with order flow on a higher time frame going from IRL to ERL or ERL to IRL. So I think, I'm biased, obviously. I think it's probably one of the best ways to look for AM session setups post 9:30. I think it gives you an opportunity most times to capture the entire New York session range, but you don't need to. You don't need the entire range. Something like the 2022 model may only happen 35, 40% of the time in a morning session. You'll miss out on a day like this, right? Not a clear 2022, no sweep of sell side, things like that. So 2022 model is perfect. There's nothing more you need. But if you can refine it down and create your own model out of it, like this ATM model is basically a combination of the 2022 model and then Cameron's model, which he released in 2023, probably in the summer at some point. And both of which are extremely, extremely good on their own. Would you say that drawn liquidity isn't met yet currently and we expect price to run up to the ERL and possibly expect a reversal in that 10:30 to 11 o'clock window? I would assume so. I would like to see this ERL taken by 11 for sure, even by 10:30. Like the last, like even by 10:45. Like we should spool aggressively once we close above this IPG. That does not mean, though, that there's an opportunity to go long in here. Still got to monitor the other 4. ES looks healthy. I still want YM to trade through or hold in this order block right now. And DXY to sink, take out their 955 low. but you just watch it. You watch to see how it wants to move. Yeah, no problem. We'll see you tomorrow. Struggling in it, I would say, if, put your stop in a good position, in profit. Should be in profit by now. I don't think a stop at 951, it doesn't make any sense. 1004 low should be easily stop loss. Then you could probably trim it to the 1006 low. And then once we take out these highs, to the 1013 low. For a demo, obviously. Today is a very rough ATM model. We're using the context of the reversal happening over here. For 830. But on a lower time frame, we still have everything. So 15-minute SMT at the lows here. So it takes out the low. Then we have reversal basically on ES. If you look at it, it makes more sense. Okay, we take out the low, trades up, changes state of delivery. We have a fair value gap here in discount. Trades up into that. Now the 5-minute candle printing bullishly would be the 945 candle or the 950 candle. So I would use this 945 printing bullishly, drops down to discount. I'm long in there. Obviously riding it up. It's more difficult. This is not like a textbook example. So if it feels confusing or it's difficult to read, don't feel like you're supposed to get it. Your textbook ATM model is always going to be like this. It's always going to be something like this. Consolidation prior to 930, trades up, trades down, breaker, something like this. And here we have SMT. Here we have either a form of IRL or ERL. We'll say IRL in this case in premium, and then targeting an ERL in sell side. And obviously your fair value gap is going to here line up with either a breaker or in premium. And this is also going to be in a time window. Either most times in 950 macro. So if this is like your textbook setup, what do we see today? Also, notice that we did just come from a discount IRL right before 830. So if you go to your 15-minute chart, even your hourly chart, go to your hourly chart on NASDAQ. You take your dealing range from, actually 15-minute chart might be a little better. Low to high, right? That's our most current one, I would say. Here's the most recent low. I'm not going to use this one because we took out sell side here. We're using the low. I'm going to use the low. You could even pull up actually from this one if you want to. But low to high, where's 830? Right here. We drop into discount. There's a fair value gap here on the hourly chart. You can see a little better. Fair value gap and discount. So we're going to go from discount IRL to now what? ERL in sell side or buy side? It's going to be buy side, right? So discount IRL to buy side. That's also the framework we're using in here too. So it drops down there, and we want to see ERL. So that's why I got this DOL and this DOL. So it's a continuation model, which you can either get continuations with the 950 macro or you can get a reversal. The 950 macro, think about the whole entire AM session as one fractal. You can either get a reversal or a continuation. Anything in between that is inherently more difficult to trade, and you most likely want to step out. I'm trying to touch it. IPG trading through. But think about every time element, or even, time element. Silver bullet, macros, kill zones, all of those, even like volatility drivers. So 830 news or 930 injection of volatility. It's either going to be a continuation or a reversal. That's your highest probability trade setups. right? We're not going to be trading the consolidation. We're not going to be trading the retracement leg most times. We're going to be trading after the retracement back. Now, what do I mean by trading the retracement leg? Well, if you have a larger range here, and there's an IRL here, and maybe an ERL and premium up here, I'm not going to be trading this leg down into the discount IRL. I would rather just wait for it to trade into this and then trade back up towards my target. So IRL to ERL. But that would be what? A continuation entry, not a reversal. So think of everything as either a continuation or reversal. And then when you come to the chart at 9:30, when you come to the chart at a macro time, it's going to be one of those two. And if it's difficult to discern between the two, step out, just watch it, or just turn off the charts altogether. That's why maybe today was a little bit more difficult, because it wasn't a standard reversal entry. Like, we didn't drop all the way back into IRL and then come all the way back up. It was just more a continuation. And we have to get in line with the continuation. Yeah, I know. It's I'm not gonna end it until it hits that DOL. It's not getting me this time. For rally gap layered on top of here, I don't really care about that as much as I care about this order block. It can trade through this for rally gap completely, but I wanted to touch this order block, and it should not take out this low, preferably the 1019 low. If you're trailing stop, 1013 low is a good position. Even mean threshold of this order block here, so maybe at like 17,511 is a good range. Let me screenshot this. But you should be more worried about your limit order being filled than your stop loss. So don't just jam the stop loss up there, because you want to protect profits. If you're doing that, I would just say close out the position right now and let it do it. Let it do its thing. If you're not concerned about the stop loss and you're more concerned about the limit order being filled, then it's a better position to be in mentally. But if it feels like, oh, I don't want to let these profits go, just close out the position. Let it either reverse all the way or hit your profit. And either way, you get an experience out of that, because either you close it, you feel better now, and it's going to reverse, and you'll be like, oh, I'm glad I closed out. Or you're going to close it out and it's going to run to take profit. And don't think of that as a missed opportunity. Think of that as, oh, I know my draw was correct and I'm going to use that for next time. Like, I got stopped out over here on my second partial. I'm not mad it ran all the way up here. I just feel, it actually feels good knowing that, okay, if I were to place my stop position in a better area next time, I can hold longer and probably capture a larger move. So there's your perfect example of it disrespecting this for value gap and turning back into the order block. Now, it may close below this IFEG a couple times. I'm allowing for that, because if you think about on the 5-minute chart, it needs to have both buying and selling within that range before it reaches the ERL, preferably. So we could slow down in here, maybe create a false high. So maybe come down, maybe take short-term stops or something, and then create a market maker buy model back up to the ERL and taking out that high, of course. So that 1021 high, wrong time. That's in your PDF, or if you've been in the streams, you know this is a wrong high. So it's not within this range. So you could even form a model off that. If you wanted to, you could wait for days where we see a retracement leg prior to 1030, wait for it to come down, use as a target, or use whatever target on the higher time frame you have, and then use a market maker buy model off of that range. That could be its own model in itself too. There's so many opportunities. You got to just figure out what you prefer. Maybe you only like trading reversals and you don't like trading continuations, which is me for the most part. Like, if we have a very sharp drop or a sharp spike up at 9:30 or 8:30, it's more difficult mentally to accept, okay, we're not going to have a Judas swing. That's why you want to wait normally till 9:45. If 9:45 is continuing to just move in a direction, you're most likely in a continuation profile. You want to avoid those first 15 minutes, because sometimes you have two Judas swings. If price action is just pumping and continue to pump, don't be in this mindset where it has to reverse. It has to reverse. It doesn't have to reverse, especially if you're looking for a higher time frame target. What you can do though is just either wait for time. So enter in here, wait for time if you want to get the whole trend. if there's an 8:30 expansion and 9:30 is also expanding, you have to be careful as you get into Slipper Bullet hour because you can start to consolidate. If you want to get an expansion move, it should be preferably before 10 a.m. on an 8:30 day. There's your ERL hit. GG's. Yes, sir. Screenshot that. I still think it'll be pierced because this is also a wrong time. It's what, 10:26 right now? There's your daily bias hit as well. Actually, let me remove this picture of me. Screenshot the hourly chart. So had two biases basically going in the morning. Had one that was favored and hit the favored one. So there is your full pull. If you were able to get in at the low, or at least this order block and discount right at 950, that is your week and sum. 78 points. Pretty solid. Just watch for it to continue to trade through this at 10:30. But hopefully made sense though. If you didn't take a position, at least learn from it. If you did take a position, I assume you most likely did not take a loss unless your stop was pretty tight. Took a win. All of them are learning opportunities. So even something like this range in here, normally you're going to market the fair value gap. Now, why is it not going to just touch this fair value gap? Because you have a current daily range, you can either use this one or you can use this one. I'm going to use this one. Short-term low, short-term high. This fair value gap is not in premium. Sorry, not in discount. It's in premium. So where's our next fair value gap or order block or swing low or whatever in discount? Well, it's going to be this one. Even if you were to pull it from here, this is still in discount, and that's why we touched a little bit further in. Candle buy is all staying within this inversion gap, though. And then continuously moving back up, and you can see we're just pumping. So assume it's going to continue to climb, at least till 10:30. Once it hits 10:30, I'm going to turn it off. Didn't make sense, made dollars. Yes, sir. Definitely getting easier, I think. I'm not going to jinx it, but I think month of April has been a good month to tape read. Coming out of like December's price action, it was so poor between like November, second week of November, and maybe January, second week of January. It was just atrocious. Like December's PA, if you watch that live, disgusting stuff. But now, I mean, ever since really March, it's been pretty good. Even February, I thought February wasn't too bad. Yeah, April to June is the good months. But how many times have you seen this time profile play out? Right, like if you go and just study, this was the whole purpose of the backtesting stream on Saturday. If you missed it, was just looking at the previous week and how many times 10:30 to 11 made the higher low. And here is 10:30. Let's see that high taken. There you go. So that's your full profile. You get the whole thing in there. New high put in at 10:30. But I guess taking partials and then learning to hold it till time when it lines up with price. So it's either going to be a 15 or 60 minute time frame PD array in premium or discount. That's either going to be ERL or IRL, and then it's going to line up with time. So think of it as like a crosshair, right? We have, this is the X axis crosshair, and then here is the Y axis crosshair. So price is going to be basically hunting the intersection of this here. This is where the algorithm is targeting. So right at 9:30, as soon as it starts, this specific point is where it's targeting. It needs to get there. So it can't go too fast and run it out and then come back down. And it can't go too slow because then you'd have to have basically a huge injection of volatility. So if this is where and when price is targeting, you're going to see it most times within 3 to 4 minutes of price of wherever this target is, it's going to be met. So something like even this 10 a.m., 10:04 low. I told you this low we don't want to see taken out, right? Because 10 o'clock will either start a reversal or retracement leg. And plus or minus the standard deviation in my head is basically 4 minutes or so. So if it's 1 to 2 minutes off, that's fine. 4 minutes, anything pushing 4 minutes, I'm now concerned with. Is it now doing something different? Because that's within the first, like it's a 5-minute candle, right? So this 10 a.m. we're allowing basically from 9:55 to 10:05. So it's really a 10-minute window, but that 5-minute candle needs to come down and do its job. So here, this price and time element would probably be maybe this discount for value gap. Okay, so it could have been here, and then here it wanted to reach, and it wanted to reach this by 10 a.m. So maybe if you go back, I want to reach here by 10 a.m. So we're slightly behind schedule. It drops it, and then what do you have as a result? Speeds up quickly to catch up with what there wants to be. This is just all my own theory, so I don't think it's he'll come up with a book with what time distortion truly is. But time distortion in the simplest sense is basically it's taking longer than it should. You can see we're just continuing to expand. I don't know how far this is now. Probably an absurd amount. That's probably 2 weeks worth. Yeah, 120 points. Almost 3 weeks worth now. How do you manage the psychology of those poor price action? Like something like today, or just in general? Oh, long periods. Oh, that's difficult. And it'll definitely show up like August of this year. It's coming up. August is normally pretty bad. You either look for scalps or you're very, very picky with what you take. Scalps are sometimes hard because your stop loss maybe have to be a little bit larger to accommodate for the poor price action. And if you're taking scalps, you may have a negative R like 30, 50% of the time, which is kind of annoying. You have to have a really high strike rate. I would say just wait for days that are, it's going to be high probability. So only the 8:30 news days, only the 10 a.m. news days, and maybe even using the news to get in, or just strictly just using those days to find the setups. Anything outside that, like the Mondays during those periods are terrible. Even days where there's no news are just tough. So it's all about managing risk in the sense of you don't have to force anything in those months. So August of this month, or August of this year, I mean, when that comes around, I'm most likely going to be streaming less. I'm not even going to be looking at the charts on days that I know it's going to be pretty poor. May look at it here and there, but it's good to just step away and not force anything, because then you either just burn up your mental capital or your physical capital faster than you need to, and no one likes to do that. But that's why in the months where where we're in now, like last week, you got to just kind of abuse it. Like it may feel uncomfortable pushing it every single day, but when you're given opportunities like that, there's no reason, I feel like, not to. You don't want to have a strict cap. Yeah, 50 points is a good target, but if the opportunity is there to make 80 points in the week, why wouldn't you take the opportunity? Maybe you cut position size after you hit your target, but as long as the opportunity is there and the edge is present, you have to not push the edge, but use it to its max capabilities, because there's going to be entire months and weeks sometimes where it's not obvious to you. Why didn't you get in at the 10 a.m. retracement flux? Sorry if you already talked about this. I was already stopped out at this 10 o'clock candle, basically. on my second partial. It was just poor stop management from me, which I'll journal and fix for the future. But I wasn't super comfortable with the profile, so I'm basically still fine with this stop out. But entered in here, stopped out after first partial on this high, and then stopped out there. So I'm not going to re-enter with my draw after I've taken a profitable win. That's just my own risk management, though. If I take a nice W on the setup, I'm not going to re-enter and look for another one. But yeah, that would have been a nice entry with the discount IRL. Even this discount IRL to premium in here, discount to ERL up there. And you can see how well this IPG was used. So when you're targeting ERL or IRL, most times ERL, look back in price on the 15, 5, hourly, and the 1 minute chart, obviously depending on what your drawing liquidity is. So if we have a higher time from drawing liquidity, I'm not going to drop all the way to the 1 minute and scroll all the way back. But if we were to create a market maker sell model here, pop up, take that, and go lower, I'm marking out all these gaps on the left, mentally or physically, because they're going to create stuff like this where price slows down, maybe wicks up into it, and you're questioning why. You may be scared if you don't have this marked out, but it's just dropping a discount, trades up, drops again. That may scare you, maybe force you to close your position out early. But just trusting that as long as the visual aspects are holding, there's no reason that it's gonna do something stupid, right? Like as long as you see these order blocks holding, you can trust, okay, I'm gonna continue to drag my stop. Like even here, like if you didn't even take a partial on this, which would be surprising to me, and you wanted to drag your stop maybe to here and then to here, you could continue to just ride it up by just dragging a stop and not even having a partial or take profit, which I think is kind of stupid. I see some people do that on YouTube and it just doesn't make sense to me. Like in my mind, if you don't have a take profit or you keep pushing the take profit further and further, that to me is a sign of a poor trader, or maybe just someone who is a little bit more greedy than they should be. Maybe not a poor trader. Anyways, so this high doesn't have to be taken. This is not a false high. If you have time after the stream, watch the I'll post the video link again so you don't have to scroll up. This one, if you get time, and then maybe read up on the time PDF if that interests you. So we'll go ahead and wrap it up there. I appreciate you guys joining, sticking around for an hour or so. I hope it was insightful. I will post a stream recording ASAP. And Lord willing, I'll have a stream tomorrow morning. 9:30 will be probably a little more difficult than this, but hopefully we can find some good quality trade setups. Make sure to not backtest, but screenshot this, screenshot yesterday's if you haven't already, and record it so you can, I think I posted it, did I? It should be, it's posted in the polls chat as well as in the YouTube vids chat. I don't think that the preview is there, but it should be posted. It's just, it looks weird because it's just a link. This one right here, I'll reply to it in the polls chat so you can see. Anyways, so have a great rest of your day. Get some sun if you can, get outside, and I will see you guys tomorrow. Peace.